Financial stability is a priority that all of us have, especially those of us who are in retirement. But unfortunately, with COVID and inflation and everything else that's going on in the world right now, it's getting harder and harder for us to feel secure. Now, fortunately for retirees, there is an option. It's called home equity conversion mortgages. And I want to share with you the top 12 benefits that I see when I work with my own clients. So as we get into this again, I want you to kind of keep in mind not only your own needs and your own goals, but people who are around you, your friends, family, neighbors, because I can guarantee that there are people around you right now who are struggling financially and need options, and a home equity conversion mortgage could be life-changing for you and for them. And so let's jump right into this. But the first thing that we need to talk about before we talk about the benefits of a home equity conversion mortgage is the details of how they work, right? So let's talk about the requirements. Number one, if you're considering a home equity conversion mortgage, at least one of the homeowners must be 62 or older. Now, the spouse can be under 62. The spouse could be as young as 18. As long as they're married, they both will be on the mortgage. They'll both be protected for the rest of their lives. The second requirement is that when you're doing a home equity conversion mortgage, the home must be used as your primary residence. You can't do this for second homes, investment properties, or anything like that. It must be your primary residence. And the third and final major requirement that we have on these loans is that there needs to be significant enough equity in the home to provide for an equity reserve as dictated by FHA and FHA's guidelines. And so when we're working with clients who are considering this type of mortgage, these are the three primary things we look at first of all. This isn't everything, but of course these are the biggest hurdles we have to get over. Now, after closing your home equity conversion mortgage, these are the requirements that continue to exist as long as you have the mortgage. Number one, again, it must be your primary residence. If you ever move out of this home, you have to sell or refinance the home. You cannot keep this mortgage if you're not using the home as your primary residence. The second is that you have property expenses. Regardless of the mortgage you have, if you have a VA mortgage, a FHA, conventional, if you have no mortgage, you still have required property expenses. Things like property taxes, insurances, HOAs, and so even with this type of mortgage, you continue to make those expenses. The third requirement is that the home must remain in safe and livable conditions. Now, don't let this worry you at all, right? What we're talking about here is that if your home deteriorates in livability, you've got broken windows or holes in the carpets or you've got holes in the walls or something of that nature that makes it a hazard for you to actually live in the home, then yes, at that point, you may have to sell or refinance the home or do some major improvements so that the home is safe for you to live in. Okay, and so those are the three primary requirements after you've closed on a home equity conversion mortgage. Now, let's jump into the benefits, because this is what I love about these mortgages. This is why I do these mortgages exclusively, because these are the reasons why this loan has changed so many people's lives and why so many people are gravitating to this loan now, especially amidst the difficulty we find in the world. And so the first and foremost benefit is no monthly mortgage payment. This is why this loan is such a life changer for so many people. For most of us, our largest expense and our largest asset happen to be the same thing, our homes, right? We have large monthly mortgage payments, we have equity in our home, and so it's both a support and a drain at the same time. Now, with the home equity conversion mortgage, you're able to leverage the home. You're able to leverage your equity to eliminate that monthly burden of a mortgage payment. Now, as I mentioned before, you do have to pay your property expenses, but the interest and the mortgage payments itself are deferred until you either pass away or you sell the home and no longer need it. The second benefit that really excites me often when I work with clients is the ability to consolidate other debts and expenses. And so imagine if we could eliminate a mortgage payment, consolidate car loans and credit cards. I have clients that are saving $2,000 and $3,000 a month. And if they're living on a $3,000 or $4,000 fixed income, this is why it's life-changing. This is why it makes such a big difference for them. The ability to eliminate so much burden while maintaining the ownership of their home is an incredible blessing for so many people. A third option is supplemental income. If you have the equity in your home, some of my clients have set up a fixed monthly payment, where for the rest of their life they're going to get a small payment from the equity of their home to help supplement their Social Security and pension and other things that may may not be quite enough money to get by from month to month. The fourth benefit that I love is the line of credit for financial reserves. We worry about emergencies, right? A health issue, an accident. Sometimes we want to have money to fall back on to buy new tires or go on a vacation or help a grandchild. The home equity conversion mortgage line of credit provides for these reserves. If you have the equity in your home, you can set up the line of credit so that you have thousands of dollars that you can draw upon when you have that need. And so this has been really helpful for a lot of our clients. The thing that I love most about the line of credit is that it comes with what's called a growth feature. What that means is that if you have a 6% interest rate on your mortgage, your line of credit will have that same 6% growth rate, meaning that, again, let's give an example so you kind of understand what I'm talking about here. If you had a $100,000 line of credit and a 6% interest rate on that mortgage, then that $100,000 will grow automatically by 6% a year. And so for a lot of my clients, this is a better way for them to store their money because they're getting a much higher return with this line of credit than they would at the bank. You know, a CD, a money market, in most economies would pay 0.25%, maybe 1%, maybe 2% if you're lucky. But with the HECM line of credit, you're getting 3, 4, 5, 6, 7% growth on that money. And so it's a great way for you to put that money away and store it until you need it down the road. But best of all is anytime you draw money from your HECM in your line of credit, it is non-taxable. The government doesn't see it as income, so they do not tax those draws. Number 7, you retain ownership. And this is a misconception that a lot of people have. They think that if I do a HECM, I'm giving the home to the bank and they're just letting me live there. This is totally false. You own this home. If you want to paint it purple, you can paint it purple. If you want to plant an apple tree, it's your home. If you want to sell it or refinance, this is your home, right? You own it just like with any other mortgage product that's out there. You have ownership of the home and you have a lien against the home so that the bank will get repaid once you no longer use the home. Okay, and so the third one that I really love is the financial flexibility. Even though payments are never required on a reverse mortgage or a HECM, you can make payments if you want to. And so a lot of my clients say, you know what, we're saving enough money, we can continue paying $500. Beautiful. You're going to get the exact same benefit if you would with a conventional mortgage. That money you're paying pays down your mortgage balance. It adds to your line of credit if you have one, so that you can come back to the bank down the road and say, hey, I want to draw some of this money back out, and they will allow you to do that. Number 9, this loan is government insured. Now be careful, not all reverse mortgages are government insured, but the HECM is sponsored by FHA and it does come with the mortgage insurance guarantee that makes this a non-recourse loan. That means that if the market were to crash and values were to go through the toilet, totally fine. At no point can the bank come back to you and say, hey, you got to start making payments, or hey, you got to get out of the house, or hey, when you pass away, they can never come back to your family and say, we're losing money here, you guys got to pay up, right? This is a fully insured, non-recourse loan so that neither you nor your family can ever be held responsible for any losses that are associated with the mortgage. Number 10, equity protection. As I mentioned, the beauty of this is that with the way this loan is structured and guaranteed by FHA, we're providing that you can never be held responsible for any losses on the loan. But the nice thing about the new HECM is that the loan is designed to set aside enough of your equity up front so that the odds of your home ever going upside down are very, 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 very small. And so the beautiful thing is that typically, if your home will appreciate by 3 or 4 or 5%, which is customary in America, then not only will you never go upside down, but likewise, you will actually continue to grow in your equity every year. As your home appreciates in value, that appreciation usually will offset any charges from the mortgage that are being added to the loan. And so you continue to hold a substantial amount of equity, even though you have no mortgage payments, you have the ability to draw those funds. And so it's a great way for you to protect that equity for you and for your family. Now, again, I mentioned this already, so I'll jump through this quickly, but if the market goes up or down, it doesn't really affect you. Now, going up is great because you can always refinance and improve the loan, but if it goes down, no problem. It goes down for everybody. But the beauty is that you don't have to make a mortgage payment, and so you're not as concerned about it as your neighbors who are still making a mortgage payment on a home that's upside down. The 12th benefit that I really love is that your heirs have options. When you pass away, the children or your heirs still have options to keep this home. They own the home, just like any other mortgage. When you pass away, they inherit the home. But the thing that I love is that they can choose to refinance this home and keep it, or they can sell it and keep any equity that's left over. It is now their home, and so they get to make that choice on what they're going to do. They just cannot keep the mortgage that you've set up for yourself. And so I hope this information is helpful for you. If you're considering doing a reverse mortgage, I hope that, or a home equity conversion mortgage, I'll hope you reach out to us and ask us all the questions you have. That's what we love to do. We love to educate people and help them understand the ins and the outs, the pros and the cons. We want to make sure that the benefits of this loan align well with your goals so that you're setting yourself up for life-changing improvements. And so again, if you have questions, reach out to me personally at 435-359-9000. You can also email me. You can visit our website. You can visit us on social media and anywhere else that we're posting so that you can stay up to date on what's happening in the market and with this product specifically. So thank you so much for watching.